Hi, everybody, welcome back to Ox Talks. It is Wednesday, June 12th, 2024. Thank you all for tuning in to the show today. I appreciate your time. I appreciate you watching the channel. If you're not subscribed, please consider subscribing, support the channel. Most importantly, let's share these videos with as many family, friends, colleagues, and coworkers as you possibly can. Put the stuff all over your social media, so we can continue to get the word out relative to what's happening in this country economically, politically, and all the things that we discuss on this channel all the time. We sprinkle in a little bit of own your own business and what it takes to be self-sufficient. We're talking about a little bit of prepping, security, being self-sufficient, all these kind of things I believe are becoming more and more important each day. So I'll jump right into a few topics I want to discuss today. I've been, as you know, on the road for 4 or 5 days, the last couple of weeks, doing some time away with family, and also been prepping for a trial which is going to, it looks like, go on June 28th. And a lot of law and motion work has been crazy here at the office. And then, of course, trying to find time, as you all know, is difficult to do, to set aside time from a busy schedule to dedicate to family. But it's very, very important because as I'm seeing, the time goes by very quickly. So I want to start by sharing, obviously today was it was CPI day. The CPI numbers were released this morning. We'll get into that briefly. And of course, the Federal Reserve had their meeting today, and there was a press conference afterwards. I was busy all day today with client meetings. I had a hearing this morning that went about an hour, and didn't have time to tune into that, but did pick up bits and pieces. The takeaway I got, weigh in, let me know your comments below, is that the takeaway, I think, is that Powell was a bit more hawkish than the markets had expected him to be, given this morning's CPI numbers. Now, maybe, which apparently show that the CPI, that the inflation rate is maybe slowing or cooling just a bit. At least it's not going in the wrong direction, according to these official statistics, obviously, which we all have to take with a grain of salt. But that Powell's comments were not as dovish, right, or rate cut-ish as the markets would have liked. I saw something that Powell was looking at, maybe, or indicated there may only be one rate cut this year. Look, let's see how this plays out in the coming days. A lot of times the markets don't really settle in, and you don't get a real genuine reaction from the stock markets, at least, until a day or two after these Fed Reserve meetings happen and the press conferences with the statements. So let's see what happens. Gold and silver closed up today. I would have expected better gains, given that the dollar got beat up so much today. The Dow closed down a bit, but the NASDAQ closed high, and the S&P closed up as well. So cryptos have been extremely volatile. I saw crypto down, or Bitcoin down a couple $1,000s yesterday. Today I saw it back up a couple $1,000s. Don't know where it's at as of the time of recording this show, but extreme volatility we're seeing in cryptos. We're seeing big volatility right now in metals and gold and silver. So look, strong hands, guys. Hold on to positions, not financial advice, but there will come a time where all of this stuff, as Greg Manarino often says, will reset to fair value. And when it does, watch out below. There are going to be certain asset classes that are going to get their butts handed to them on the way down. The CPI numbers today, I just had a snapshot from CNBC this morning that showed a CPI month over month was flat. It was expected to rise 0.1%. A CPI core was 0.2% month over month, whereas they expected 0.3%. So again, these numbers came in a little bit better than expected. CPI was 3.3% year over year, expected was 3.4%, and the core CPI year over year was 3.4%, expected 3.5%. So look, this was a dovish signal for the markets today. The markets, of course, hoped that Powell would maybe revamp his game plan when he came out with comments today. Much of that stuff is probably pre-prepared, but we'll see where, again, in connection with the CPI numbers and his comments today, where the markets, the stock markets and the metals markets and the USD, where all of that opens up tomorrow. A couple other stories I wanted to share with you. One about the jobs market that I saw today on the Zero Hedge, talks about, and the title is, "Are the Jobs Drying Up?" Again, weigh in below, share your comments with me. It seems to me that we're well beyond jobs drying up right now, but nonetheless, I want to share with you a portion of that story. And what it says is, and there's a couple of charts in there I want to show you as well. So the latest jobs report, which we covered up just very, very briefly on a show last Friday. I was out of town, and it showed that all these hundreds of thousands of jobs were being created. Because the latest jobs report underscores this point. The headline number seems amazing. It says, until you drill into the jobs themselves, looking at the more accurate household survey instead of the establishment survey, it says we find a huge loss of 625,000 full-time jobs. And those are mitigated by an increase of part-time workers of 286,000. This is not a strong and vibrant jobs market by any stretch, it says. The press releases are pitching job losses as, in fact, job gains. So again, not to regurgitate or cover old news, but I wanted to, make it clear that point, it's important that point be driven home. Of the spin we see on all official data points coming out of government mouthpieces, we have to understand they are usually very skewed. And then, of course, also revised months later, continue to get several revisions one way or the other. It says, because all of this inflammation, strike that. It says, our disorientation is so severe that it's hard to process intellectually and psychologically what that actually means and how it's being skewed. It says, despite all the cheerleading we get from the White House, the bottom line is that the whole country, as with the whole world, are much poorer today than they were 5 years ago. And I wanted to share two charts with you that were in that article that I think, when you see these visuals, sometimes it helps to drive the point home. The first one is consumer loans, which is credit cards and other revolving debt, all commercial banks, versus the personal savings rate. Now here it's in color. So you have the debt levels in blue and the savings rate, personal savings rate of people in red. Can you see that chart right there? Look at that divergence. Look at the debt and look at the savings rates in this country. Okay, that's the first chart. Picture's worth 1,000 words, right? Second chart is job openings, total non-farm, and job openings, total private jobs. And this is a chart going from before September 21 into the current month. You can see both blue and red, private and non-farm payrolls are both falling off a cliff. Okay, again, picture worth 1,000 words. So let's keep that in mind, what's happening with the jobs market in this country. The last story I'll share with you today talks about the housing market. This was yesterday out of Fast Company. And it says, how bad is the housing market recession, right? Existing home sales are back to 1978 levels. And we've shared over the past several months a lot of data points that come out, and they say, look, you've got to reach back 30, 40 years or more to find a point where the data was looking this unfavorable. So let's talk about this article. The recession in the U.S. housing market for existing homes has been so deep, it says, that April sales were back to late 1970s levels, despite the population growth since that time, according to recent data from the National Association of Realtors. April of 1978, there were 4.09 million U.S. existing home sales. April of 2024, there were 4.14 million U.S. existing home sales. 1978, U.S. population, 223 million people. 2024, U.S. population, 341 million. So again, when you see it broken down that way, we've had an explosion in obviously in population growth, but we're basically flat relative to existing home sales. The reason it says, of course, is that housing affordability has deteriorated much of many buyers and sellers alike, or deteriorated, so much that many buyers and sellers alike have pulled back from the market. We know this. Many homeowners who would otherwise like to sell and buy something else are staying put rather than trading in their 3% mortgage for a 7% mortgage rate. This is in addition, according to a forecast published this week by Goldman Sachs, the recovery for the existing home sales could be a slog, it says. Goldman projects the existing home sales will slowly drift up from 4.1 million in 2024 to 4.5 million in 2027. Not only is that far below the 6.1 million during the height of the pandemic housing boom in 2021, it's also well below the 5.3 million U.S. existing home sales during normal times, quote unquote, normals in quotes, in 2019. It says, while the recession for existing home sales has coincided with pricing corrections in some pandemic boom towns in parts of Texas and Colorado, many housing markets in the Northeast and the Midwest, where inventory has remained tight, have continued to see rising home prices. Leave a comment below. What are you guys seeing relative to home prices in your area? Obviously, on the coastal cities, sometimes they tend to be more resilient for a period of time, whereas internal parts of the country see a quicker or more of a substantial downturn. So let me know what's happening in your area with real estate. In terms of turnover, existing home sales, new home sales, and values, okay? Love to hear from you guys. Additionally, it says the U.S. Markets for new homes has fared much better than the market for existing home sales. We've covered this before. The reasons for that is that single-family home builders don't have a lock-in effect. They can continue to develop and build new homes, and then the home builders, of course, have basically cut the home prices, outright cut their home prices, or they do mortgage rate buy downs to help to insulate that. So it says Goldman predicts the average 30-year fixed mortgage will fall to 6.5% by the end of 2024 and 6.3% by the end of 2025. Look, guys, that's still a far cry from the mortgages just a few years ago. As I recall, I don't have the actual timing of the stats in front of me, but it's like mid threes. You could land a 30-year mortgage just a few years ago. And now Goldman's saying by the end of next year, it'll only be down to 6.3%. And that's if they're even accurate. It may not even get that low. So people are still going to be paying double for their 30-year fixed mortgage monthly payment than they would have just a few years ago. And we all know that everyone is paying more for property taxes, homeowners insurance, and all the other costs of maintaining a home. So it says the analysts and the investment bank forecast the U.S. home prices will rise 3.8% in 2024 and 4.4% in 2025. So I thought that was a good article to share with you. Again, it was from Fast Company, yesterday's article. But 1978 levels. All right, I'm rambling on a bit long today, 13 and a half minutes. I'll be leaving in about an hour to get my workout in. We talk about all the time on this channel, every day. Fitness is important. You need to keep your steps going. Please get the strength training in. Do something. Move, get off the couch, be active. You need to really, whatever your age is, and obviously, depending on your physical limitations, please make those efforts. The diet as well. Keep that diet strong. I don't like the word diet, but choice of food, things that you put into your mouth, calorie intake. It's calories in, calories out. I'm sure I'll get some hate comments about my views on fitness and working out, but that's kind of what I'm doing. We're trying to walk the walk. We need to all be healthier individually and certainly as a nation. We look around at just the people walking around every day that I see without passing judgment, it just doesn't look very promising. So 14 minutes, guys. Hope you have a wonderful evening today. I should be able to post a couple more videos later on this week. I'm back here in the office, normal routine now for about another month or so. So I'll be touching base. Again, thanks for being here. Talk to you soon. Bye.